gentlemen, we're going to go ahead and get the meeting started. I ask for Fee to come back up and introduce our guest speaker.
Come on, Fee. Be free.
This will be much shorter. It's a privilege to not only be the sponsor, but have the opportunity to introduce our guest speaker today. Quickly, Mr. Jim Donelon has served as the Commissioner of Insurance for the state of Louisiana for more than 15 years. He was first appointed as Insurance Commissioner in February of 2006 when the seat was vacated by the incumbent. He was later elected to fill the unexpired term in 2006 and has been re-elected for 4 consecutive full terms, 2007, 2011, 15, and 19. His current term will expire in 2023. A native of New Orleans, Jim graduated from Jesuit High School, the University of New Orleans, and Loyola School of Law. His public service career also includes 33 years in the Louisiana Army National Guard, where he retired with the rank of colonel and received the prestigious Legion of Merit Medal. Jim and his wife reside in Jefferson Parish. They are the parents of 4 daughters and grandparents of 8 grandchildren. One thing I want to mention before he gets up, when I first embarked on my insurance career, you have to take the property and casualty insurance exam, and one of the questions on it was, what is the term of the insurance commissioner? And the joke back then, prior to his position, was that it was 5 to 7 years, depending on the crime that they committed. And the reason why I say that, preceding Mr. Donelon coming in office, the 3 prior commissioners of insurance were charged during their career of certain malfeasance in office and other things. And one thing I will say, being closely connected with him and the organization, independent insurance agents work hand in hand with his department and him over the years, is that he's brought integrity, honesty, and transparency back to the Department of Insurance, which could not be said prior to him taking. So without further ado, I'm going to turn it over to Mr. Jim.
Thank you so much, Pete. Truly appreciate that kind introduction. Kind of reminds me of a joke I heard one morning when I was driving to Baton Rouge from my home in Metairie and listening to the traffic reports given on a daily basis by T. Ben Boudreaux. At least that's what he calls himself. I'm married to a real Boudreaux. He's a fake Boudreaux. He writes jokes and sells them $1,000 a piece or whatever to the night show folks when they use one of his jokes. But this morning was right after the Illinois legislature was about to or had just impeached their governor, Blagojevich. And he's talking about all that controversy and scandal coming out of the state of Illinois. They said, he said, and it was true, Blagojevich is under federal indictment. He's a Democrat. His predecessor was a Republican. He's already in the big house. They'll probably be roommates before too much longer, he said. He said, but all that controversy piqued my curiosity. So I looked up that name, Illinois, and found out that it was actually an ancient Indian word, meaning Louisiana. Anyhow, about half the crowd that I share that with says, really? But more accurately was the point he was making for our unfortunate history over the years. But having said that, we have some really, really fine public officials. And driving here today on US 90, I was reminded of one of them when I saw the big sign to Kathleen Babineau Blanco Highway. And I took office having served in the legislature with her before she was governor, and I was chief deputy when my predecessor resigned. And she saw me actually in the Capitol and told me unsolicited, I'm sorry, she was friends with Robert, my predecessor. I'm sorry to lose Robert. So glad you're going to be there. And Jim, I will take your guidance and recommendation on all things insurance. And by golly, she was good to her word. And I got tested really quickly after taking office. First couple of weeks, I was asked for a meeting with Allstate, and had a meeting on a Friday morning, I'll never forget it, with the lobbyist for Louisiana and her associates and my senior staff, chief actuary and others, not knowing what they wanted to tell me. But what they were there to tell me was that they wanted me to allow them to non-renew, cancel actually, 19,000 policyholders from Texas to Mississippi along the below I-10, I-12 that had protection under Louisiana law, our unique 3-year rule, as I call it, that is unique to Louisiana only. Companies hate it, and I understand why they hate it, but it is the best, most important protection in the law for our property insurance market. What it says since 1992 is if you've been with your homeowner's insurer for 3 or more years, you and they are married, I call it, for as long as they do homeowners business in the state of Louisiana. They can't cancel you. They can't change your deductible. They can't raise your premium unless they do it on a statewide basis. And indeed, I'll come back to how that works in a little bit. But there's a couple of exceptions to that. If you try to defraud them, for example, of setting fire to something in your home and filing an arson claim, or if you don't keep your property up in the condition it was in when first insured by that insurer, or, and this is why they thought they could get me to give them a waiver on these 19,000 policies. If the company says publicly that if you don't, as the commissioner, they are in danger of failure, of insolvency. As you know, no bank, no financial institution, no insurance company ever wants to say out loud and publicly, we're in danger of failure. It can start a run on the bank or a run on the insurance company and cause its failure. And by golly, just before my predecessor left, he was approached by Louisiana Farm Bureau. And Louisiana Farm Bureau asked him to allow them to cancel 9,000 policies below I-10, I-12, primarily in the southwest corner of our state, and said, because if you don't allow us to do that, we're in danger of insolvency. Citing their downgrade by AM Best, their rating agency, citing their losses from primarily Rita, because their book was more concentrated in southwest Louisiana than southeast, so that their Rita losses were greater than their Katrina losses. And finally, their cost of reinsurance had gone up dramatically. And he said, okay, and allowed them to do that. When Allstate asked me to allow them to non-renew those 19,000 policies, I said, can you say that you're in danger of insolvency if I do not? Oh, no, we can't say that. That's not true. Then I can't do it. That's the law. It's been the law for more than 10 years, and I do not have the authority to waive that law. And they were not happy with that, and frankly, in that meeting, threatened to pull out of the state if I didn't allow them to do it. And I said, did I hear you correctly? And they said yes. And that really ruined my day. And I called a press conference for that afternoon, and I was running for the full term by that time, and spoke to my campaign manager about what I'd been told and what I was planning to do. And he said, you best do it, and do it today, because if you don't, I had a senator from DeRidder running against me, and he was chair of the insurance committee at that time, and he had a head start. And my campaign manager said, you will spend the rest of the campaign from February to October explaining to the people of the state everywhere you go, what did you know and when did you know it, and why didn't you tell us about it if you don't go public immediately? So I did, and they backed off. And then they tried a couple of other avenues to get around it, to where the third time they did, a year later, I had a press conference, a meeting, not a press conference, a meeting with them, and fined them $250,000 for that third egregious effort to get off of policies. And they came in to sign the documents, and I said to them, gang, this is working really well for me, because every time you try it and I stop you, I get a front page headline all around the state. But I think you might want to reconsider. And I asked them, and they accommodated a meeting with their then and still today CEO up in Northbrook in his office. Tom Wilson is his name. Took my senior staff. He had his there. Led off the meeting with, Commissioner, I'm here. I want to tell you, one day an earthquake is going to do more devastation to San Francisco than Katrina did to New Orleans. And everybody in the room, and Governor Blanco by speakerphone, we didn't have Zoom back then, all were in agreement that that certainly is the truth. But all of that said, that first day when I was confronted with, we're going to pull out if you don't let us off of these policies, I reached out to her. Couldn't reach her that Friday afternoon, did reach her that Monday morning, and she confirmed, as I was concerned she would not, that she would be there and would be guided. And that led to a series of things that really recovered us from that which until last year was the most devastating from an insurance loss point of view, most expensive, not adjusted for inflation, pure dollars, hurricane event in the history of insurance. Our claims that we collected from Hurricane Katrina totaled $23.3 billion. That surpassed our then record, which had been our piece, big impact here in St. Mary Parish, of Hurricane Andrew in 1992. And we collected for that $500 million. So Katrina beat it for 50 times. And 3 weeks later, Rita came ashore in Lake Charles and did another $3.3 billion of insured loss damage to policyholders in our state. A total of 1 million claims, not counting $16 billion of payments from the National Flood Insurance Program for Katrina and Rita combined. So we were significantly challenged. And in crisis back then, that was very comparable to, although, and it might be that I'm 15 years older now, but this seems worse. And I think it really is worse than it was back then, for reasons I'll touch on in a little bit. But we went about, with her leadership, recovering our market. And all the way through, she was there and true to her word, including in a special session she called 2 months after Rita cleared the state of Louisiana to address the issues that we were facing. And the first thing she did was offer $100 million of money to companies to come write business in our state, focused on the coast, by taking policies, 25% of their writings that they had to do to earn that money over a 5-year period of time. 25% of it had to come out of citizens. We did that. It was incredibly successful. We had 5 companies applied for and received $29 million of the $100 million that was offered. And by the way, that $100 million came from a surplus similar to what we're experiencing this year. Last year, the chair of the Senate Insurance Committee, Kirk Talbot, called me and said, Jim, what do you think? Should we reauthorize and create another incentive program? Because we had repealed and sunsetted all of the legislation authorizing an incentive program after the use of it after Katrina and Rita. I said, why not? Let's do it. We were struggling already with failed companies impacting us out of Florida, and so let's put it in place. We did, knew we had no money to access because the budget was extremely tight and there was no money to access. But then the rebuild started, and with the rebuild, for Laura, Delta, Zeta, and Ida, primarily Laura, with $9 billion of paid losses, and Ida with $14 billion, combination of $23 billion paid, over 800,000 claims that were filed. That stimulated through the roof sales tax revenues to the state, income tax revenues to the state, generating the $1 billion this year plus surplus that we have in this year's budget, and $1 billion plus projected for next year's budget as well. Same thing happened after Katrina, and that's where Governor Blanco got the $100 million to put up. Only 29 million of it was accessed by 5 companies. When they, under the old program, and again this time, when they took a grant, $5 million, for example, they had to put $5 million of their own money into an escrow account, in effect, matching the grant that they got, additional capital into their company. Then they had to agree to write 2 times the combination of their $5 million and the grant of $5 million, total of $20 million of new business, with 25% of it coming out of Citizens. They had to stay on that $20 million of premium for a minimum of 5 years. All 5 companies did, with the exception of 2 that had to refund $3 million because we got reports, monthly reports from the companies on what they were writing and what they were still on and what they were not. And the ones that we clawed back $3 million for not complying with the full 5 years, extended 2 more years to 7, readily admitted that they had not earned the $3 million and refunded it. So in the first year of its existence, 40,000 policies were taken out of Citizens, which had grown to 173,000 policies total, which was our 3rd largest property insurer behind only State Farm and Allstate. Citizens had 10% of our property insurance market. And frankly, for a while there, was the only game in town for those looking for property insurance coverage. We have copied that in a special session. Well, we created the program a year ago and then went into a special session, convincing the governor, and he was very accommodating, and the 2 leaders of the Senate and the House, Clay Scheck-Snyder and Paige Cortez, that it was necessary to do a special session, even though it was only a month before the regular session, because people were hurting. People were turning in the keys to their homes because they couldn't afford the cost of Citizens coverage, which was the only thing available to them. Citizens, when Laura hit, had shrunk from 173,000 policies after Katrina and Rita to 35,000. We had passed and created a depopulation program 10 years ago, where every year we were compelled by statute to open our books to all the private companies to look at our policies and take, or offer to take, all the policies that they wanted off of our books onto their books. And with a veto by the agent of each of those policies and the policyholder. First, the agents have to approve it, then the policyholders have to approve it as well. We had depopulated that book of business from 173,000 policies down to 35,000 when Laura hit Lake Charles. In fact, we had to change the word in the statute from shall offer their policies to may offer their policies, and I added to it with an eye toward a geographical spread that is still necessary for Citizens because of its concentration of policies in St. Tammany, Orleans, and Jefferson parishes, which is our big hurdle and challenge in today's market. But it worked. The incentive program brought 5 companies in. They were followed by 20 more small regional companies reinsured up to their chins by the international reinsurance marketplace, enabling them to take on that exposure, which, frankly, the big national companies are not willing to do, not just in our state, but in all coastal states, from Massachusetts to Miami and around to Mexico. They have exited. In fact, in the special session that Governor DeSantis just had in Florida in December to fix their broken litigation system, a study was advocated to the legislature over there by the insurance industry that said of the 8 largest national carriers that write homeowners business in Florida and in Louisiana, of those 8, it's all the national companies you would know the names of, with one exception, Nationwide. They will not write in Louisiana, despite our pleas ever since our bad old days of 3 straight insurance commissioners going to federal prison. We have pleaded with them. I've even threatened to sue them, to require them to change their name to almost nationwide if they are going to maintain that position. They will hire one of our native sons, Peyton, to promote their insurance all over America. But no thanks. We don't want to be in your market. But of the 8 national carriers that are in both, in Louisiana they have between them 61% of our homeowners market. In Florida, 25%. And the difference is our 3-year rule. And the companies had a bill in this just concluded session to repeal the 3-year rule. And I asked the governor, and we're different parties, and I don't have the same relationship that I had with Governor Blanco, but I went to him and said, Governor, if they succeed in doing that, not in my lifetime, I'm 78 years old, but in your lifetime, Louisiana will be the insurer for hurricanes in our state. And Louisiana cannot afford that. We collected $26 billion for Katrina and Rita. We collected $24 billion for Laura and Ida. The state doesn't have that money, nor the capability of getting it. In fact, Florida worsened their situation politically. They did it when they elected a fellow named Charlie Crist governor 2-3 years after their 4 hurricanes in 2004. And he promised when he was running for governor, pointing at the camera and saying, if you elect me, I'm going to lower your insurance premium, your insurance costs. And by golly, he did. Called a special session. Citizens in Florida is just like citizens in Louisiana. It was, I should say, originally. And it called for the same highest premium to be charged by citizens, 10% above the highest private sector in each individual county over there, parish here. And it was working. Under Jeb Bush, it was working as designed. And Charlie Crist changed it into a market of choice. In that special session, lowered his citizens' premiums 25% across the board. It immediately became the insurer of choice for property insurance in the state. 15 years later, it's still the #1 property insurer in the state of Florida. And they have been working and trying every which way for 15 years to get it back down to below the private sector so that the state would get off of that risk. And in fact, the Wall Street Journal a couple of years ago ran an editorial ripping Crist by name and the legislature for their irresponsibility, saying they're just one Hurricane Andrew away from bankruptcy. Because I'm not going to waste your time here today. If during the Q&A we want to talk about it, I'll be happy to expound upon it. But they also have a state reinsurance program called the CAT Fund over there. And between the two of them, the Wall Street Journal said Florida is just another Andrew away from bankruptcy. As booming, as prosperous, as growing as they are, they can't afford the risks they've taken on in their citizens and in that CAT Fund. And it's really unbelievable that they've done this to themselves. And if they had wanted to do things right, they need just look down the coast to Louisiana, parentheses, of all places, close parentheses. And I have said, and they then recounted what we had done under Governor Blanco with our incentive program, with our building code, new statewide building code, with the repeal of the old political rating commission, and a number of other things that were very beneficial to our recovery and had worked until recent times. So those things said, the governor got on board and helped us kill the bill that would have repealed the 3-year rule. The industry also put a bill in to deregulate rates. And the deregulation was the most extreme version. There's 3 versions of rate regulation in the 50 states. We're one of 20 that has prior approval for rates. Another 20 has what's called file and use, which means companies have to just file what they want, and then they have 30 days typically to implement it, or let the department can object to its implementation. But what they were proposing is what's called use and file, which means they implement rates, whatever they want, and then send a copy to the department who can't veto them unless they find something illegal or unconscionable or whatever, that they can take to a review board like our Division of Administrative Law and convince them should not be allowed to continue to be collected. Only 10 states have that form of ultimate deregulation. The governor and I were also successful in preserving our prior approval. And I want to add, we do a lot of rate filings, hundreds of them, 100 of them a month, or a little over 100. We do them in 29 days turnaround, within, including weekends and holiday days in that 29. And I dare say we have 5 full-time actuaries on our staff, and we pride ourselves on turning those things around. In the Q&A, if you want to ask for examples of why that's beneficial, I'll tell you about Equicat and my disagreement with them 10 years ago with being used by State Farm, and price optimization, which I shot down 5 years ago, and now 20 states have outlawed in a dispute with Allstate. And finally, on prior approval, know that insurance is a cost-plus business. Each state's prices are based on what their state experience is, profitability or loss, cost, etc. So that the higher premiums are from companies, the more profit companies make. And with recent filings from for property insurance from major national carriers, I have, and my my chief actuary, who retired 2 years ago, hired three commissioners back, did a great job, was nationally recognized as one of the best in the land. Used to inform me on the profit margin allowed to companies in their rate filings was typically 6 to 8%. In our auto market, it was generally closer to 8% because companies were unwilling to write to some extent in Louisiana, although we have all the major national carriers writing auto insurance, unlike property insurance. But of recent times, companies have asked for now 13% profit on their homeowners' book of business, and I, under the threat of we're not going to bring this product to your state, have reluctantly gone along with a profit margin of 13%. And sure enough, shortly after I did for the first company, others came in asking for the same profit margin on their book. So all of that to say, it's a continuous challenge. We are faced with natural disasters. Our crisis today is in part due to the natural disasters of Laura, Delta, Zeta, and Ida, but the majority of it is as a result of companies coming to our market from Florida, where they couldn't make money in recent years, came to our market and ultimately failed because of their losses in their home state of Florida. We had 9 companies fail that were doing business in Louisiana. 5 of them were domiciled and regulated in Florida and failed because of their Florida book. 3 of them were in Louisiana. They failed because they didn't buy enough reinsurance. They went cheap on their reinsurance buy and didn't have enough had enough for Laura, didn't have enough coverage for Ida. And one located on Poydras Street in New Orleans, but chose to be re-domesticated and therefore regulated by the District of Columbia instead of their home state of Louisiana. And I dare say their failure was one of malfeasance on the part of the leadership of that company. So with those things said, got a lot more to talk about, but I know you have business interests that will generate questions. I'd love the opportunity if I could get some of you to put a hand up and give me a shot at answering some of your concerns. Yes, sir.
How do we fix this?
We fix it first. Oh, great question. And I had notes. The short-term answer is the incentive program, and that's going to fix the problem. I do believe if it works like it did after Katrina and Rita, 40,000 policies out of Citizens, we don't know how many they took in the private sector. We only know what they took out of Citizens. That stabilized the market within a year and brought other companies like those to the market to the point where before Laura, for 5 consecutive years, homeowners rates in Louisiana went up 1% per year. That's half of the very low inflation we experienced in those 5 years because we had 24 small regional companies reinsured up to their chin, competing with each other and keeping prices at that very low level. So that's the short-term answer. The long-term answer we just copied from Florida. Just got $30 million put into the budget last week to fund it. It's called Fortified Homes. And what Florida, I said Florida, I meant Alabama. I'm sorry, I'm talking faster than I'm thinking. But Alabama did this 5 years ago. They started with Mobile and Baldwin counties. Fortified is an enhanced roof. And I have an agent friend in Houma and an agent friend in Thibodeau that both have, quote, camps on Grand Isle. They live in Houma, live in Thibodeau, but have camps in a gated community on Grand Isle. 135-mile-an-hour winds, no damage, because they built high enough and strong enough with fortified standard roof on top that it didn't affect them to the degree of having to file a claim. Public officials in Jefferson, Grand Isle's part of Jefferson, have documented that as well. The strong-built roofs in particular were able to withstand Hurricane Ida force winds on Grand Isle. So we're copying what Alabama did. They started a fortified program, inspectors, certificates, transferable certificates from one owner to another, and basically what the roof gets, 2 things. One is what's called ring shank nails, which are, I call them hybrid nail screws. Now, and they attach whatever the covering of asbestos or metal roof or whatever to the decking firmly, and to the point where when you have need to repair a roof, it is a bigger job to repair a roof because when you take those ring shank nails out, they destroy the decking that they were put into. So you have to take the whole decking off. But for the purpose that it's there, the roof itself, they are required and they're very effective. In addition to the ring shank nails, you also are required to put an adhesive cover over the decking so that the connections, the touch points between sheets of plywood don't leak if the asbestos comes off. It works. It's proven. In Alabama, it's been there being installed. They now have 36,000 fortified, certified by inspectors that are trained and certified to be inspectors, certified inspections and quality of construction. 36,000 homes. And I did a panel at Mississippi State University for their I-Day with my colleague from Mississippi, Mike Cheney, and Alabama, Mark Fowler. And I was bragging about the fact that we're copying the grant program that Alabama's had in place for 5 years, giving out $2,000 to $10,000 grants on a lottery basis and an electronic selection basis to recipients. There's no means testing. Everybody's eligible to participate. And Commissioner Fowler said, Jim, I want you to know that we broke Taylor Swift's record. Each time we've gone out with a grant offering, we're out of grant money within 8 seconds of going online offering the $2,000 to $10,000 grants. And that's great. Alabama's done 6,000 of their 36,000 fortified roofs with grant assistance. The other 30,000 are being done voluntarily on their own. New construction and folks who are putting a new roof on that are doing it out of their own pocket. Total of 50,000 fortified roofs have been done in Alabama. North Carolina has 17,000 or thereabouts. And South Carolina's got a couple hundred starting the program like we are here. That is the long-term fix for us. If you build high enough and you build strong enough, you can live on Grand Isle. I can assure you of that. And that's what we have to do on a long-term basis. So while Alabama has done 6,000 grants, they only do $5 million a year. The legislature just gave us $30 million to start the program here in Louisiana. And we're excited about that. We think that's the long-term answer. Yeah.
Can you comment on the FEMA risk rating 2.0 situation and the Attorney General's initiation?
Yeah. The Attorney General asked me to do what I had never heard of before, even though I've been a lawyer for more than 50 years, a declaration to include with his lawsuit on behalf of our state and with non-other states as well. And the lawsuit's thrust is about transparency, because we can't get them to give us what they're using to price this new risk rating 2.0 method of pricing. Under the old method, we knew how it worked, and they encouraged us, and we did spend billions of dollars all across coastal parishes in Louisiana, building levees higher, building property higher with fill or with pilings or what have you, to the tune of, like I said, billions of dollars. Risk rating 2.0, which went in, actually, to be honest, it was first proposed under Trump. And it was put aside, I think, as we got closer to election year, and was reinitiated by FEMA under Biden now. And it's based on a black box of criteria that we can't get access to, that Kennedy and Cassidy can't get access to, have been fuming and fussing about it, having meetings with FEMA, and they're stonewalling them even, as well as our congressional delegation led by Majority Leader Scalise. So the lawsuit is focused on getting that. The impact, that aside, the impact is devastating. Similar to what happened with Biggert Waters in the last long-term reauthorization, the year I was NAIC president, and was asked to come to the Oval Office to meet with then President Obama about the Affordable Care Act and the first year of unqualified plans being forced to be withdrawn by Blue Cross, with thousands of folks with high deductible plans that didn't meet the requirements of the Affordable Care Act. That was happening all over America, and Obama wanted us commissioners to bless extending for 1 year those ineligible plans to meet the requirements of the Affordable Care Act. While there, I brought a letter from GNO Inc., who had put a coalition together from, fortuitously, the Northeast, Superstorm Sandy victim states, New York, New Jersey, Connecticut, Democrats and Republicans, all along the coast, and including us. Public officials, chambers of commerce, government bodies, councils, police juries, etc., urging a rollback. And the president had been on record as saying he was opposed to rolling back the 5-year glide path that Biggert Waters called for to actuarial rates. And when Speaker Pelosi was quoted, well, actually, she was quoted about the Affordable Care Act as saying we had to pass it so we could see what was in it to find out. Same thing with Biggert Waters, another 1,000-page bill that reauthorized the program for 5 years, but had the, we assume, we know from our delegation's point of view, because everybody supported it in our interest, it had the unintended consequence of rendering tens of thousands of policies of properties in the state of Louisiana worthless overnight, because they required flood insurance to get a federally backed mortgage. The price of flood insurance under that 5-year glide path was prohibitively expensive. It rendered the property worthless. Same thing with risk rating 2.0 today. And we can't get them to tell us what is and what is not a factor in setting rates under it. It's in effect. It's been in effect since last year for new property or property that has not been insured previously. So those rates although they are capped for existing policyholders at increases of 18% per year, compounding, and all the long-term reauthorization plans that are being proposed by Kennedy with Menendez of New Jersey and Cassidy with Gillibrand from New York call for lowering of that cap to 9 or 10%. I think is what they're calling for, which would be a big help. But that only protects folks with continuation of coverage, even from one owner to another, if the previous owner had coverage in place. But it's devastating to our economy. We're more dependent on that program by far than any other state. We've collected in Louisiana $19 billion in claims payments from the National Flood Insurance Program. For the 2016 flooding events in Lafayette and Baton Rouge, 4-parish area, in both of those 2-day 12-inch rainfall, the average FEMA grant for uninsured losses was $9,500. The average NFIP policy payment for those of the 12% in those 8 parishes in those 2 areas, $90,000. That's the difference. The federal government, through the SBA, does come in and let you refinance your house, generally making it underwater financially, but taking from you in the process the biggest asset in your repertoire of savings and wealth accumulation by that mortgage being applicable.
So
Yes, sir.
What do you tell a young couple or someone who's living here that wants to buy a home or is coming to town to buy a home, and they get the perfect house, they go to buy it and they find out the insurance between flood insurance and property insurance, $8,000-$10,000. It's got to blow the deal.
It's unaffordable. It's unaffordable.
What do you tell those people now?
What I tell them is help is on the way in the form of those incentive grant companies writing new business, and long term. I told my own daughter in Metairie, because she called me and said, Dad, I'm thinking about going uninsured. And she's married to a neurosurgeon, so they can probably afford to take that risk. I said, but if you're going to do that, and I understand why you would do it, put a fortified roof on your house, because they got Ida damage. They've been waiting on a reputable roofer who only did full roofs, no repairs, since Ida, almost 2 years ago now, and their turn came up. But I said, if you're going to self-insure, put a fortified roof on, and then get yourself a fire policy that is half the price of a full homeowner's policy, and get coverage for the things you want to insure. So what I would tell young people is help is on the way in the form of these new companies. We have 8 that took the 42 million of the 45 million we got in a special session. We now have an additional 10 million with the 3 that's left from the last time. We'll be going out with another round to get the 13 million we now have available out to an additional, hopefully, the 8 companies that didn't get everything they wanted will get the rest of what they wanted, and others will participate. And Fortify is the answer for our coastal exposure. And I can't tell you how much I agree. I've seen national articles that said the American dream of home ownership is in serious question today. And they're not talking about wildfires or hurricanes. They're talking about the cost of construction, inflation, interest rates, the whole 9 yards. But for us, it's worse. And I make the point, I was in the JAG Corps for years, and one of my favorite movies is A Few Good Men. And one of my favorite actors is Jack Nicholson, except I say he's never acted a day in his life. He really is crazy. And when Tom Cruise broke him down on the stand, he went off on a tirade, if you recall, saying, you want me on that line in Guantanamo. You need me there so you can go back to your silk sheets in Washington suburbs and live comfortably and sleep tight, because you need us on the front lines protecting you. America needs us on this coast. We have energy that they need. We have seafood that they need, but both. We have ports that they need. We have chemical plants. We have refineries that they need, and we need. And when we staff those facilities all across coastal Louisiana, we need school teachers, we need firefighters, we need restaurant owners, et cetera, to be here to provide that to our state's economy, but the economy of the United States at large. And if we can afford to pay for corn to be grown in Iowa, to do ethanol at the gas pump, we can afford to do flood insurance at an affordable rate here in South Louisiana. Yes, sir.
Understand the incentive program brings in companies in an attempt to make a more competitive market. But after these incentives are up, without an agreement in place, what's going to keep them from leaving, backing up after the next big storm?
Well, first off, if they don't stay on it for 5 years, and as I mentioned, we extended to 7 years last time, they owe us the money back. And we have the money escrowed to get it back from them. So they only earn it as they write that coverage. And based on the formula from the old incentive program and from the new one. So none of them packed up and left after Gustav, which was not insignificant, $2.3 billion hurricane that came through, made landfall in Houma and went through Baton Rouge, first Baton Rouge event since Andrew in '92. But they weathered that. They weathered Laura, a non-billion-dollar event. The thing that broke the bank for the three that failed in our state was inadequate reinsurance and the fact that they were over-concentrated where it was easiest to write business, and that is St. Tammany, Orleans, and Jefferson, and got too much demand for the resources they had available. But bottom line, there are no guarantees in life, and we can lose companies in the future. We are taking more proactive steps to monitor their reinsurance buy. First off, the first thing we did, not this session, but a year ago, was we copied something Florida did 5 years ago. And that is we increased the historically low, I say historically, that had been low for forever, for decades, cash amount you needed to start a new company. It had always been, in my experience, back to my legislative days as chair of the insurance committee, only $3 million. We had a desk rule that really made it $5 million, wouldn't let you in the business unless you put up $5 million. Well, that now is $10 million by statute. That's the minimum. Now, you can say, and rightly so, well, Jim, we had 9 companies fail. Liga was left with $800 million of losses to pick up. $10 million is a drop in the bucket, and it is. But what $10 million does, and Florida 5 years ago went from $3 million to $15 million. What it does is it motivates the owners of those companies when they come to get into the business and continue to do business to buy more reinsurance, because they have more skin in the game, as I call it. They lose that $10 million if they fail from their operations. So the purpose and the motivation for them is when they go to Bermuda, go to London, buy that reinsurance, buy enough or more than enough to not fail. And if they do that, then they won't pull out of our state, just as they didn't pull out after Laura. So it's a challenge. It's a constant. If we over-regulate or if we over-require companies to have assets, they won't come. They won't do business here. They'll go to other places that aren't as stringent or as high in their requirements for solvency. Yes, sir.
So you keep talking about the reinforced roofing program.
Being what?
The reinforced roofing program?
Fortified, yes.
So what is the expected estimated savings from that?
Oh, great. Thank you, because this is an important thing that happened in the legislature. when the fortified structure, just like I said a year ago, we recreated the incentive program, copying from the aftermath of Katrina and Rita. We copied Florida's authorization for the fortified program a year ago. Didn't have any money. The state budget was tight last year. This year we got the $30 million. What they did last year, when the bill was going through the process, as introduced, it said every company, and we did this when we did the building code, every company shall file a rate discount that will apply to their property insurance policies for homes built to the fortified standard, just like homes built to the building code standard have been required to have a discount offered by the companies. Each company has their own discount. It varies from one to another. But in the legislative process, we have looked at the tapes trying to find out who authored the amendment. It was not offered. It just happened, kind of magically. It went from shall to may file a discount. Well, in this session, I made a lot of noise about it. It now says shall. So every company shall file a rate reduction or discount for homes that build to the fortified standard. Generally, in Alabama, my understanding is it's about a 20% discount in coastal counties for homeowners insurance built to the fortified standard. Did I answer your question?
So that also only applies to the wind insurance program?
No, that applies. The 20% is the whole 20% off the whole price for coastal states, I-10, I-12 below. 40% of our premium for homeowners, at least, is for the coverage for wind and hail. So it's 20% overall on a full homeowner's policy. But I don't think I did. What was your original question?
So we're talking about what's the estimated savings?
Oh, 20%.
Really, it's the savings versus the cost of doing it.
Yeah.
Earlier about how they're getting into a model that's going to range between $2,500 and $10,000.
Wait, here's the difference between building our newest upgrade of the building code that went into effect January 1. We paused where building codes nationally are built to the standard of what's called the International Building Code. And every 3 years, you're required to update your building code to meet the newest version of the International. But during the pandemic, the governor, who has the authority, paused that upgrade. So January 1, 3 years after that pause, another upgrade was due. So we did both of them. We did the one that was paused 3 years ago, and we did the one that was set by normal schedule January 1st. So we are really recognized nationally in the insurance world as having a good, if not very good, building code in place. Fortify, the newest upgrade of the building code requires 95% of fortified standards. There are other parts of fortify, like windows and connections to the slab and front door openings and garage door openings and such. We're 95% of that in the building code of that fortify standard. So it's really strong protection and comes with that 20% rate discount. Did I get it this time?
There's also, is it approximately a 20% increase?
Oh, the cost. The cost of building fortify roof is really only about $2,500 over the normal cost. The problem with that is, and the reason we're offering $10,000, you do have to document that you spent whatever you got. You have to do that or be subject to reimbursement. The reason we're doing the $10,000 is for most homes, not new construction. That's only $2,500. But for most homes, it's going to cost $15,000 to put a new roof on, and you got to take the other roof off and put a whole new roof on to get that fortified standard of adhesive covering over the decking and ring shank nails into the decking. So Alabama tried first to only give 2,500 out and didn't get any takers because folks had to spend 15,000 to get the roof off to get the 2,500. So they did what we're now proposing, 2 to 10,000. The money can be spent. The bulk of it will be spent taking the whole roof off.
Right, so that's saying that if we are giving the rent, it's not actually going to pay for the entire thing. The homeowner is going to incur some cost of it.
Absolutely.
It's hopefully the savings wash and basically.
Exactly.
To someone else's point earlier, so off of that subject, the other thing that you mentioned was incentivize companies to come in. Now, I believe y'all started with approximately $45 million. You said recently y'all upped it because actually the request from those insurance companies surpassed.
Yeah, I rambled through that. Go ahead.
Sorry. So, my question is, do y'all feel like that's enough in comparison to other states like Florida who get $1 billion in a place that's really incentivized? So we spoke earlier about the generous surplus that we're running for the state. Do we feel like $45 million is enough?
I think it's enough because we had $45 million from the special session. We got asked for $62 million from 8 companies. I didn't have to give any of the companies a haircut. I didn't have to pick and choose because of the 8, a couple didn't fully qualify because of their the solvency requirements or because of their licensing requirement. So only $42 million of the ask was eligible and awarded. We had $3 million left from that. We got $10 million more, so we have 13. We will get to $55 million of the $62 million that was asked for by those 8 companies. I don't sense, and I didn't say this earlier, when Governor Blanco offered $100 million and only $29 million was accessed by 5 companies, she offered the remaining $71 million 2 more times, got no takers. Mark can vouch for this, but in the insurance world, there's a herd mentality. They all go in at the same time, and they all get out at the same time. And there was a reluctance to come into Louisiana property insurance after Katrina and Rita. It took a while. But the success of the 5 incentive companies that were able to do it for 1 year, 3 years, 5 years, attracted 20 more similar companies to our market. Most of them, frankly, from Florida, and some of them failed in Florida and therefore in Louisiana and South Carolina, and UPC was in New Jersey and New York as well as Texas. But I think that, frankly, our $55 million will be enough. I think that's enough for the appetite I sense that's out there right now. Wish I'd have gotten more. Asked for up to the $62 million, but only got up to the $55 million with the additional $10 million. I'm not unhappy that and I even talked to my chief of staff on Friday when I found the final numbers of $10 million and $30 million. Can we do what's called a BA7, a Budget Amendment 7, in July when the new fiscal year starts, taking money from Fortify and putting it into incentive if we sense a greater appetite for incentive. And if we don't give out money in the incentive program, it goes back to the general fund. So there's no harm in having more than you need there. It goes back to the state if it's not accessed, as was the case after Katrina and Rita. Well, thank you very much. Thank you, Perry. Appreciate your inviting me.
Thank you, Mr. Donelon, for your informative presentation.